Okay, good afternoon, all. Thank you so much for being here, despite the situation we're in now, where we're supposed to do face to face, and I'm here online. So thank you so much for coming. And I shared with you this file, this financial statements, cash flow, ROIC, EVA, FS ratios lesson for October 6. There are 1, 2, 3, 4, 5, actually around 8 worksheets that we're going to work on. Okay. So as a start, let's have a review of your accounting lessons. Now, to the question, what are financial statements? I provided here an answer. Okay, there could be other answers, but the idea behind this answer captures everything about financial statements. So they're also called financial reports or financial statements, and they are formal documents. When you say formal documents, it means that they can be presented formally, okay, and they were prepared formally. When we say formally prepared, it means that they were not prepared. They are prepared following certain guidelines or rules. So they're not prepared just at the whim of the one making the financial statements. So there are certain rules, there are certain guidelines, there are certain practices that need to be followed, so that in preparing financial statements, that way financial statements are quite standardized. Uh, of course, other countries, each country may have its own practices, may have its own policies, but there's a move to make the financial statements as uniform as possible. That's why we have what we call the IFRS, the International Financial Reporting Standards. That way, if a company doing business in, let's say, the Philippines, the whatever the financial statements generated by the firm and submitted, let's say, to USA or to other countries, then it will be easy for the users in that country to understand the financial statements, because there is now mostly a universal practice as far as the generating of the financial statements is concerned. So they are formal documents, and they're used to comprehensively. Okay, when we say comprehensively, as much as possible, all about the company, their transactions, comprehensively and accurately. Okay, accurately record and reflect an enterprise financial condition, number one, operating results, and cash flows in a specific period. Okay, so there are three things that are mentioned here. Financial conditions, that refers to the balance sheet. Operating results refer to the income statement, and cash flows refer to the statement of cash flows. Okay. In a standard financial report, a company's financial activities and performance are presented in a readable manner. Okay, so it's not something that's esoteric. It's not something that only a few can understand. It's supposed to be generalizable as much as possible, so that anybody, any user, will be able to view it, understand it, analyze it. Okay, so why do companies need financial reports? What do you think? Any suggestion? Any answer? You may chat, or you may wish to raise your hands. What do you think is the reason why a company needs to generate financial reports? Yes, feel free to raise your hands, or let me acknowledge you. Who would like to share? Anyone, please? Chat, or you may unmute yourself. Why do you think do companies need financial reports? Anyone? Any volunteer may just chat in the chat box so that I can read your answers. Okay, the question is, why do companies need financial reports? Okay, so maybe we're having some connectivity issues there. So one of the ways to answer this question is to look at who are the users of financial reports. Okay, it's not only the company generating the financial reports that make use of the financial reports. Okay, so first, of course, as far as the company is concerned, as far as the one generating the financial statements, okay, they need it because this information from summarizing the transactions, accumulating it, aggregating it to come up with this standard report allows them to analyze the performance of the firm and then use it for internal decision making. Okay, it can provide them with valuable information so that they can strategize or develop policies or strategies in order to for the company to better meet its objectives. So without the summary financial statements, it will be very hard for the firm to know where they are and to know if they are missing their targets because they don't have any benchmark by which they can compare or they can see their status, their current status. So financial reports are very important for the company itself. That's for decision making, for analysis of the firm's performance. Okay, for example, in the income statement, you can see the revenues. Okay, so if, for example, their goal for this year, the revenues, their goal is 15 million, and they only generated 12 million, then that information, which can be found in the income statement, could allow them to ask questions. Okay, and then moving forward, try to see how they can address the variance, okay, the difference between their target revenues and the actual revenue. Because 15 million versus 12 million actual, that's quite a lot. Okay, that's 3 out of 15 that where they missed the mark. So that's 1/5 or 20%. They were not able to meet their target and missed it by 20%. That's quite a big variance. So knowing this information through the financial statements will allow the company to answer that question. Okay. All right. Aside from the company itself, that can use the financial reports for their analysis and for the decision making. Who else? What other parties need financial statements? What other parties will benefit from the use of the financial statements? Anyone? Yes, David, thank you.
Uh, I think the other parties, such as the creditors.
Okay, yes. What about the creditors? Why do you think creditors would demand that the firm present to them financial statements?
I think they want to see if the company who will borrow money from them
Yes,
can actually pay what they've borrowed.
correct. So they can use it to decide whether to lend the company or not. Thank you. Thank you, Jude. That's a very good answer. So would-be creditors, they will conduct due diligence. They will say, could you present to us your financial statements? And of course, the assumption is that the financial statements were generated following generally accepted accounting principles, okay, which is a function of external auditors, okay, the assurance function. Auditors have the task of looking at the financial statements and providing an assessment whether the financial statements are fairly uh, and materially uh, are fairly presented. Okay, so that's the function of the auditing. Some of you might be interested later on to pursue an accounting course or accounting path, and then that will be one of the possible field that you can engage in auditing. Okay, the audit services or the assurance services, and assuming that the financial statements were presented fairly, the operations of the firm, okay, is materially correct, then we can trust the financial statements generated by the firm. And there are big assurance companies like SGV, ABM12. There are big auditing firms in the Philippines that render that kind of an opinion about the financial statements. Okay, so thank you, Jude, for that answer. Yes, you're correct. Creditors are interested in the financial statements because they will have to decide whether the company is capable of servicing its obligations. Okay, if the company is already highly leveraged, which means that they have already a huge debt ratio, then the company would think twice to lend them because they might be servicing too much interest expense already. Or if so, if they're going to lend, then they might charge a higher interest rate because they will be assuming a greater amount of risk. And that's just very consistent with the principle of risk and return, right? So any other parties that are interested in the financial statements of the firm? Yes. So Dean, yes, we mentioned that. Okay, management and also shareholders, the owners. Okay, yes, that's very true. Management, which we mentioned a while ago, the firm itself, and shareholders, those who are not involved in the management of the firm, but they are the owners. They of course would want to see if the firm is performing well, because they can decide also to either to download, sell their shares of stocks, or buy new shares of stocks, depending on their risk appetite, depending on their goals as investors. So it's important for management to provide shareholders a fairly presented financial statements. Okay, thank you, Dean. Okay, so we already identified the company itself, the creditors, shareholders, and also, yeah, of course, government, right? Government requires that the company uh, generate these financial statements for assessment of taxes. Okay, and there are other parties that are interested in the financial statements of a firm. So there are many parties that would require that a fairly presented, fairly generated financial statements be given to them. Okay, so from your accounting subject, we know that there are three basic types of financial statements. Okay, and the three basic types, some others would say there are four. Okay, so let's just identify what they are. So first, you have, so what do you have, class? You have let me just write it here. So we have the balance sheet. Okay, let me reduce they have the balance sheet, and then you have the income statement, and then you have the cash flow statement. And some would indicate that aside from this, also you have the statement of changes in shareholders equity statement, and some would even include the notes to the financial statements. Okay, but these three are the three most basic ones: the balance sheet, the income statement, and the cash flow statement. So quick review, guys. What's the balance sheet all about? It tells us of the what? When you take a look at the balance sheet, what information do we get? It tells us of the financial what? Financial position of a company at a specific point in time. Okay, so you can see financial statements, for example, it states there December 31, balance sheet December 31. So what that tells us is that as of December 31, you have the balances for the different accounts that you can see in the balance sheet. Okay, how about the income statement? The income statement tells us of the results of operations. Okay, results of operations or operating results of a firm at a specific what? Class? Anyone? The income statement will give us results of operations at a specific one. Anyone provide the answer, guys? Waiting for an answer. Specific. Okay, it's period of time. Okay, so the difference between the balance sheet and the income statement, suppose this is 2021. Okay, so this is January 1, and then this is December 31. The balance sheet reports the financial position at a specific date, for example, December 31, while the income statement presents the results of operations for a particular period, for example, the whole of 2021. Of course, for the income statement, it can be just 1 month, January 2021. It can be just 6 months. It can be just 1 week, okay? Or it can be just even 1 day, for as long as we're looking at it from a periodic perspective. For the balance sheet, it's just one point in time. So at the end of December 31, for example, how much cash does the company have? Okay, and then lastly, the cash flow statement also tells us what we have here. The cash flow statement tells us what are the sources and uses. Saan nanggaling at saka ano yung pinaggamitan of cash, also at a specific period of time. Okay, for example, for the whole 2021, what were the sources of cash and the uses of cash from this, and this activities. So what type of activities are these? Where we look at the sources and the uses of cash, and that can be found in the statement of cash flows. What activities are these, class? Anyone, please? Okay, yes. Shekinah, please.
Operating, investing, and financing po.
Thank you. Very good. That's correct. Thank you, Shekinah. So that's operating, and then we have investing, and then we have financing activities. Okay. May question lang ako, class. In your accounting subjects, were you able to generate a statement of cash flows? Yes or no, please? Did you learn in your accounting? Did you learn to make statement of cash flows? I would appreciate some feedback from you. Did you learn how to construct this cash flow statement? Hello, guys. I need to know because if not, if yes, then we will not anymore look into that lesson.
Sir, for cash flow statements po, it was not really discussed. But
Okay,
we did po one, I think.
okay, we did one. So uh, it was not discussed, meaning medyo kulang pa. No? Okay, sige. So maybe we'll have also a discussion of that. All right. And then we have the two others, changes in shareholders' equity, to see what happened to the component of shareholders' equity in the balance sheet. Okay, the common stock, the retained earnings, the preferred stock if there is, and then link it to the income statement. So the changes in shareholders' equity links the balance sheet and the income statement. Okay, it tells us also of the changes in the equity amount, equity accounts. Okay, for a particular specific period of time. Okay, and also the notes to the financial statements, which can be found in audited financial statements. So these are the most basic types of financial statements. Okay, so again, just a quick review of the question here. We answered this. What are the components? Okay, we haven't answered that. What are the components of an income statement? Anyone, please? So what can we find with the income statement? What do we find there? Okay, so for the balance sheet, I mean, sorry, not income statement. For the balance sheet, we have the assets. These are the resources that a firm owns. Okay, a firm needs to have assets in order to generate profit. Without the assets, class, how can there be any profits? How can the company generate sales? Sales emanate from the assets that the company possesses. Okay, so the assets, as you know from your basic accounting equation, uh, can be financed either by liabilities and your shareholders' equity. So this is for a corporation. Shareholders S apostrophe, no? Kasi maraming owners. No? Shareholders' equity. For a single proprietorship, you know that the equity account is called capital. Okay. So what are the types of the assets of a firm? Ano ba yung types ng assets? You have, yes, David, please.
Current and non-current assets.
Okay, thank you. You have current assets. That's correct. Choose this. You have current assets and you have non-current assets. Okay, non-current assets and current assets. So let's identify what are the components, subcomponents of current assets. How are current assets arranged in as far as the balance sheet is concerned? The current assets portion. What principle is used in arranging the current assets? So, or do you just arrange the preparation of the current assets depending on your mood? Okay, so paano class? How is this arranged? Anyone? This is arranged according to, yes, let's see. Yes, thank you. Thank you. Who's this? Okay, Shikaina, thank you. Yeah, you're correct. It's based on liquidity. Okay, so let's identify the current assets that's supposed to be based on liquidity. Okay. Okay, so what can we see under the current assets? Anyone, please? What will be the first one? Yes, it's all right. Thank you. Thank you. So it's of course cash. Okay. So I think may nag-raise. Who's Jude? Would you like to unmute yourself?
Oh, sir, nasagot na po yung sagot ko, cash.
Okay. Sige. Ano pa? Thank you. What else? What else? So isa lang ba yung laman ng current assets? What else can we find under current assets? Yes, Mark?
Sir, accounts receivable po.
Yes, okay. So let's put here receivables. So all types of receivables. No? It can be accounts receivable or trade receivables or notes receivable. Okay, all types of receivables are lumped into this account receivables. What else? Ibig sabihin may kulang pa tayo dito. No? What else? Any of the current assets. So you missed on the second one. How about the fourth one? What will be the fourth one? Cash, and then blank, and then receivables, and then pecking order niyan or arrangement order according to liquidity. What other asset after receivables form part of your current assets? Okay, anyone? Okay, we have an answer here. Okay, thank you. What's this? Okay, Mark, thank you. However, yung allowance for doubtful accounts, it's a contra asset, no? Ibig sabihin nun, dinidikit siya dito kay receivables. So it's not an asset per se, it's not a current asset per se. It's a contra asset. So di ba sa balance sheet yung makikita nyo dito, less allowance for doubtful accounts, and then you have now your net receivables. Actually, yung pinapresent usually sa current assets, yung net receivables. Okay, so the allowance is not, it's a contra asset. It's always together with receivables. Okay, but thank you, Mark, for your answer. Okay, any other suggestion? Okay, store and office supplies. Okay, that will form part of. Nasa dito siya sa pang-lima, pang-dulo. Ito siya. Letter P. Ano siya? Ano yun? Office supplies. That's your PPE. Ang PPE, yung mga equipment dyan. Hindi siya yung mga office supplies. Ano yung P na to? It can take the form of office supplies. It can take the form of insurance. Pwede ring rent yan. No? Ano siya? Dapat asset yan, ha? They're called your... Okay, let's see. Yes. Okay. Thank you. Shikaina, you're correct. So it's your prepayments. Prepayments. So there are different types of prepayments. What are prepayments, class? What are prepayments? These are expenses that have already been paid, but not yet utilized, not yet used. For example, prepaid rent, parang advance payment siya ng rent. Hindi pa natin nagagamit yung na-use up yung rent na yon, pero nabayad na natin. So it's considered as a current asset. Prepaid insurance. Okay, so these are the types of, these are prepayments. We're still missing two. Okay, you're missing one very important current asset. What's that? This one. Ano yan, guys? Especially for manufacturing companies, this is a very prominent asset sa kanila. It's your so what's this? For manufacturing companies, ito yung pinaka nila, importante sa kanila to kasi bread and butter nila. Okay, anyone? Okay, correct. Thank you. So again, Shikaina, no? Thank you, Shikaina. These are inventories. Okay. By the way, I hope you have learned in your accounting that office supplies, ang office supplies, ano ba siya? Prepayment siya or inventories? Office supplies. Can anyone answer that? Ang office supplies ba, inventory siya or prepayments? Okay. Prepayments. All right. It depends. Okay. If the company is engaged in buying, selling office supplies, then it will form part of inventories. Okay. But if not, guys, prepayment yun, yung office supplies. Kasi it's intended to be used for the operations. Tapos, nabili na siya, nagastusan na, pero hindi pa nagagamit sa operations ng firm. Okay, and it's not intended for sale. Ang inventories class are intended for manufacturing and intended for sale. That's why pag for a manufacturing firm, there are three levels of inventories, three types of inventories. Ano yung mga inventories pag manufacturing? Anyone? For manufacturing, ano yung mga inventories class? NCA. Okay, sa manufacturing class, ano yung types of inventories? Anyone? Hindi nyo pa ba na discussion? Merchandise inventory, ginagamit yan sa isang merchandising type ng business. Buy and sell. Okay? So, pag buy and sell, yung account yan ang tawag merchandise inventory. Okay? Walang production na pumapasok dun sa inventory na yon. Sa manufacturing, hindi. Kaya nga meron tayong tatlong levels. What are these, guys? For manufacturing, they are your okay, so what are these? Ano yung inventories kapag manufacturing? You will see this sa kanilang balance sheet. No? Tatlong levels ng inventories yan. They're still part of inventories. Pero ano yung klase na yun? Can anyone guess? Ano kaya itong tatlong? So that's for a manufacturing company. So manufacturing. Yes. Okay, so thank you. Thank you, Dean. You're correct. So meron tayong raw materials. So raw materials used for production, part ng inventory yan. Raw materials, and then you have finished goods. And then yung nasa gitna, we call it work in process. Work in process. Raw materials, work in process, and finished goods. Ito yung three types ng inventories that you will find in a manufacturing firm. Distinguish that from a service organization na hindi nagbebenta. Kunyari, let's say a barber shop, no? A barber shop, that's a service organization, and then they do not sell any merchandise. So it's strictly a barber shop, kunyari mga mom and pops ng mga barber shop din sa makikita mo sa mga streets, no? They're not selling any lotion, they're not selling any let's say whatever material for the hair, then that's a service organization. And you will not find any inventory sa balance sheet nila. Kasi ang inventory, kunyari yung mga tonic, yung mga, let's say, yung mga materials that they use for powder, hindi mga ano yun, hindi mga inventory yun. Kasi hindi naman sila ginagamit for sale. Strictly speaking, ang inventories are these are items that are considered for sale, na ibebenta siya. Buying and selling, or raw materials muna. Tapos the company will manufacture. Yung mga hindi natapos, ang tawag dyan, work in process. And then finally, yung mga natapos, ang tawag sa kanila, finished goods na. Okay? For a merchandising naman, may inventories din. Okay, and then you must have learned already yung periodic system, di ba? Perpetual at saka periodic. Okay, where one records yung mga binibili na na item for sale as purchases. Tapos yung iba naman, yung isang method, inventories. No? Okay, and lastly, manufacturing, where you have 3 levels: raw materials, work in process, and finished goods. Okay, we have one last. What's this? Ano pa hindi natin na-identify na short-term assets dito? What's this, class? This is your ano siya? So 5 yan, no? Cash, and pwedeng cash and cash equivalents, kasama dito yon. And then we have this one, receivables, inventories, and prepayments. What's this? What's this, guys? Anyone? Okay. Ano siya? Sure? Any guess, class? Sure. Okay, it's your marketable securities. No? Marketable securities. These are short-term investments, STI. Short-term investments yan. Kunyari, treasury bills. No? 90-day treasury bill. So hindi pa siya cash. Pero it's tradable securities yun. Ibig sabihin, pwede mong ibenta yun, which can easily be converted into cash. Okay? Or, since 90 days pa siya, hindi pa kagad siya, you can wait for it to mature and then convert it into cash. So, the current assets is arranged according to liquidity. No? And yan ang order niya, no? Walang hindi siya pwedeng pagpalit-palit, no? Kasi standard yan. Standard, and the person preparing the financial statement should follow the standard, the practice. Okay, and then we have the NCA, non-current assets, and this take the form of ano to? Okay, ito. And then so what are this? What's this? Anyone? Okay, this is your long-term investments. You know this, I saw this answer a while ago, yung PPE, property, plant, and equipment. For others, they use fixed assets. And this is, what's I? What's I, class? Work ni Rizal yan, no? Work ni Jose Rizal. That's a work of Jose Rizal. This I. What's this? What did you learn in your? Yeah, I think you have that subject. Ano yun? Authored by Jose Rizal. Anyone? Guys, ito. Hello? Ano ba novel ni Jose Rizal na pag-aralan? I don't know if you still study that when I was in high school. Dalawang books yun na we were supposed to read from cover to cover and analyze. Okay, kayo, pinag-aralan niyo ba yun? Hello class. Are you still here? What's I? Ang clue ko nga sa inyo, it's one of the novels written by Jose Rizal. Yes? Somebody would like to unmute yourself? I heard somebody. Anyone, please? Ano ba novel ni Jose Rizal ang alam niyo, class? Sana may mag-chat, please. Ayan, okay. Thank you, Isabel. Noli me tangere. Ano ibig sabihin ng noli me tangere? What does that mean? Okay, David, Jude?
Touch me not, sir.
Yeah, touch me not, di ba? So pag touch me not, ano yan, guys? Touch me not. Yes. Yes. Jude.
Sir, is it intangible asset?
Yeah, intangibles to, guys. Intangibles siya. Okay, intangibles is a type of non-current asset. In, not tangible, touch. So, yung ano ni Jose Rizal, di ba? Yung novel niya, Noli Me Tangere. And that was derived from when Jesus Christ showed himself to the apostles. Tapos, I think it was Peter who wanted to touch him. Sabi niya, touch me not. But at one point naman, pinaano niya si Doubting Thomas. Anyway, that's biblical history, a bit of biblical history. So intangibles, no? So what are examples of intangibles? So for example, goodwill, okay, patents, okay, copyrights, copyrights, okay, also brand, pwede. So these are intangibles. They provide value to the firm, okay, that cannot actually be touched, no? Kaya intangible siya. And they form part of your non-current assets. And lastly, those other assets that cannot be classified here, they form part of what we call the other assets. So those are the types of assets, okay, current assets, the non-current assets. Okay, how about income statement? What does the income statement give us? We already defined this. It gives us the results of operations, right? Operations, results of operations. And here it's for a period of time. So ibig sabihin for the whole year of 2021, period of time, etc. Okay, and then this one, statement of cash flows, sources, as I mentioned a while ago, and uses. Saan ang galing at saka saan ginamit yung cash? From operating, investing, and financing. Operating, investing, financing for a specific period of time din. So yung income statement at saka yung statement of cash flows, they're all collect the information comes from a period of time, while the balance sheet, yung information niya is generated at a specific point in time. Okay, so let's go to our first worksheet model here, basic model. Okay, I hope you have a copy of this and you're able to follow along. Kung wala, kindly just follow along. So we're given the income statement, the balance sheet of this company, Advanced Technologies. Sorry about this. This should be in thousands. Okay, 1, 2, 3. Sorry. This means that the figures are in thousands. Okay, thousands of pesos. All right. So what are we uh, expected to do? Using the financial statements, we are to construct the statement of retained earnings and also the statement of cash flows. So I presume that I don't know how far you got into the statement of cash flows. Usually sa high school accounting hindi naman masyadong dinidiscuss to, no? So sa financial lang natin kukunin. And we're asked to calculate the NOWC, that's net operating working capital. So let me just write it here. You have the NOWC. Then you have the TNOC, total net operating capital. Then you have the NOPAT, net operating profit after tax. Then you have the free cash flow. And then you have the ROIC. Okay. May I ask you, class, yes or no, if you were able to discuss this in your accounting subject? Nag-measure ba kayo ng mga to? NOWC, TNOC, NOPAT, FCF, and ROC. Paki-ano naman please, paki-chat. Yes or no please? Yeah, okay. All right. So good because this will be an opportunity to learn. Yeah, maybe you didn't discuss this in your accounting. All right. So we're asked to compute for this. We're asked to compute for this. And also meron pa pala dito hindi ko nasama. Yung MVA at saka EVA. Okay, we're also asked to compute for the market value added and the economic value added. All right, so let's take a look at our income statement for years ending December 31 for the year. Okay, it means for the whole year of 2021, the whole year of 2020. So you know that the income statement is for a particular period of time. Okay, usually, ang ginagamit ng company is what year, guys? CY, gumagamit sila ng CY. But sometimes the other would use an FY. What's CY? CY is from January 1 to December 31. So ano yung CY na yun? If the date used in preparing the income statement is January 1 to December 31. Okay, what do you call that period? Anyone? January 1 hanggang December 31. Okay, ano siya, class? Ito yun. Anyone please? Tapos ito example. Example lang ha, July 1 hanggang June 30. It can be others, no? This is just an example. So what do you call this? So the company was using, if it's from January 1, okay. Jude, yes?
Sir, calendar year.
Yes, correct. So thank you, Jude, that's correct. From January 1 hanggang, nangyari dito. January 1 hanggang December 31, that's called your calendar year. And this one, other than this date, you have your fiscal year, FISCAL. Fiscal year to. So any date other than January 1 to December 31. Okay, fiscal year ang tawag. Okay, so we have now the financial statements for advanced technologies. Now take note that this is a different type of financial an income statement. Have you discussed EBITDA sa accounting niyo? And this one, EBIT, kikita niyo to? May EBIT dito, no? Here, EBIT. Tapos may EBT dito. Were these measures discussed in your accounting class? Na-discuss ba itong EBITDA, EBT, okay, and EBIT? Okay, let me guess. Malamang hindi. Okay, so the answer is no. All right, good. Kasi we're going to discuss this. Sa finance, economics, very pertinent to mga measures na to. EBITDA, EBIT, EBT, and this should be your net income after tax, which is sometimes called your NIAT or your EAT. So that's your net income after tax or earnings after tax. Okay, so let's learn how to compute for your EBITDA, for your EBIT, for your EBT, and for your NIAT with the income statement. So we first start with net sales. No? Net sales, ibig sabihin yan, guys, you already subtracted here your sales returns and allowances, by your sales discount. Tanggal na dito yun, no? Net na siya, net sales. And for 2021, your net sales was 3 million. Okay, 3 million because these are in thousands. No? So you're going to add 3 zeros here. This is 3 million. While in 2020, it was 2.85 million. Okay, then take a look at this, guys. So there are some things that we need to understand here. First, it's operating cost. Okay, take note, operating cost. Kasi may ibang klaseng cost pa, no? There is what we also call financing cost. Financing cost, no? So ito, operating cost siya. So hindi niya isama dito yung financing cost. Also, sinabi din niya na in-exempt niya si depreciation and amortization. Okay, so pag sinabing operating cost, it includes already your cost of sales, cost of goods sold, all the other expenses, rent expense, transportation, utilities, whatever, no? Kung may recreational expense, food expense, whatever expense that form part of the operations of the firm. Okay? Now see, except depreciation and amortization. Now, depreciation and amortization are also part of operating costs. Kasi, when do you have depreciation, guys? In what instance will you have depreciation expense? Anyone, please? Saan ginagamit si depreciation? If the company has what? Waiting for your response, guys. I'm sure you know that. I'm sure you know the answer to that one. When does a company incur depreciation expense? When they have what? Hello? Class, please respond naman. Okay, thank you. What are depreciable accounts? Ano yun? Example na lang. Ano ba yung accounts ng mga dinidepreciate? Okay, thank you. Yeah, thank you, Shikaina. PPE, no? Fixed, fixed, fixed assets, no? Yung mga equipment, machinery, etc. So these are capital assets that are depreciated. Bakit siya dinidepreciate? Kasi ang principle dyan sa accounting, di ba, yung matching principle. So when you invest in an asset like machinery, okay, it's not only the current year that's bound to benefit from the use of the equipment. So matching principle means you match your revenues and your expense. If other periods will benefit from the use of the assets, ibig sabihin they will be able to generate revenues because of the use of the assets, then dapat may share sila sa expense nun in the form of depreciation. Okay? So PPE, property, plant, and equipment, are assets, fixed assets, furniture, and fixtures. Yun yung mga yung mga depreciable assets or yung mga assets na capital assets, investment in PPE, etc. Ano naman yung amortization, guys? Okay, most probably hindi nyo pa na-meet. Amortization naman, example ng assets na ina-amortize natin, example are intangibles. Okay, goodwill. patents, copyrights, brands, they are amortized over the life of the asset. So itong operating costs except depreciation and amortization. Now, what do you think is the rationale why depreciation and amortization are not included in your operating costs? Dito, dinala siya. Any guess? Thank you pala, Jude. No? Nagsabi ka pala ng equipment. Sorry, I didn't see that. And by the way, you don't say equipment. Equipment is already plural. Okay, so please remember that. Pag sinabi equipment, plural na yan. Di natin dinadagdagan ng S. Okay, so ano guys? Bakit kaya siningle out sila? Bakit kaya sila sineparate from operating costs? Okay, let me lead you to the answer. Pag nakakita ba tayo sa, let's say, sa journal, no? Kita natin, depreciation expense. Okay, sinama rin na, no? For the whole year, depreciation expense, 50,000. Okay, and then, di ba, ang credit niyan, accumulated depreciation, di ba? 50,000. Did that mean that you, on that particular period, there was a cash outlay of 50,000? Yes or no? Okay, thank you. Yeah, you're correct, Jude. Tama. So that answers the question, actually. Thank you, Jude. So there's no cash outflow. There's no outflow of cash as far as depreciation and amortization is concerned. And so to distinguish it between yung mga expenses like utilities, telephone, water kung meron, whatever, transportation, etc., all the other expenses, which are usually cash-based, no? So inaano natin siya, sina-separate. No? And later on, when we go to the statement of cash flows, you will be needing this, itong amount na to. Okay, so tinanggal natin si depreciation and amortization. So these are the values. That's why we have the EBITDA. No? What's the EBITDA? Earnings before interest, taxes, depreciation, and amortization. Let me write that. Earnings before interest, taxes, depreciation, and amortization. So that's your EBITDA. Earnings before interest, taxes, depreciation, and amortization. And for some, ginagamit din tong EBITDA na to for ratio analysis. Okay, so how do you compute for your EBITDA? It's your sales less your operating cost. All right, so that's now our EBITDA. Okay, and then we subtract depreciation and amortization. So we're given that depreciation and amortization is 90 for 2020 and 2021 it's 100. So we subtract. Okay, so this is now our EBIT, earnings before interest and taxes. Okay, sometimes this is called operating profit. Why is this called operating profit? Because we have already, in order to arrive at this, we subtract all operating costs. Okay, so tinanggal na lahat ng costs, including depreciation and amortization. So it's called your EBIT, earnings before interest and taxes, or your operating profit. And then we now subtract your financing expenses, interest, which is financing, and taxes, which is considered also part of financing. Operating profit less interest. In this case, it's 88 and 60 respectively. So we have this amount minus that one. Okay. All right. So we are now up to EBT, earnings before taxes. Okay. So next, the tax rate is 30%. Now, I think take a look at the name box. Meron ditong tax rate. The tax rate is given below, and it was given a name. Diba? Ito, 30%. By the way, do you know how to give names to cells in Excel? Kindly chat, please. If I already taught you how to give names to cells, I don't think I gave you, right? Not yet. Okay. So in Excel, it's very good to give names to particular absolutes. Okay, for example, this 30%. So this tax rate is fixed. Okay, and it's best to give it a name. There are two ways to give it a name. So let me start first with the long one, the long way, or the one, or the the it's a long way. So you highlight that cell, and then here, this is your name box. You type, okay, tax, and you cannot use a space. You only use one word, okay, tax rate, okay, enter. All right. Now this is now tax rate. If I click that, then it will bring you anywhere you are. For example, if I go here, so I'm in a new cell, right? I'm in a different worksheet. If I type is equal to, okay, if I type TA, and then I'll see here the tax rate, right? There, tab. Notice it spells, just exercise. All right, here, I use the formula is equal to tax rate. Now, this tax rate represents a particular value, and it's here. Diba? Binigyan natin ng pangalan yung tax rate dito na 30% here. And if I go to this cell, kikita nyo, it's not named as F48. Unlike this one, this is called G48. Column G, row 48. Ito, it's not called F48, but rather tax rate. So the advantage of giving names to specific or particular cells in Excel is that you can access that easily. All right. So for example, for this one, the tax will be based on the taxable earnings, okay, multiplied by the tax rate. So what I can do is, this is the earnings before tax multiplied by, and again I click TA. Okay, and I can find here the name tax rate, and I know it's a name because of the spreadsheet icon. Here, these are functions. Okay, so we will not use that. These are specific functions: tangent, hyperbolic tangent in engineering. Okay, so tax rate, and then you can see it's intuitive. You know that we're multiplying it by the correct value because of the name that we gave it. Okay, so the tax for 2021 is 58.7. Let me copy this to the right. And we expect this to have higher tax because it has a higher taxable base. All right, and then finally, the net income after tax is just the difference between your earnings before tax, or income before tax, less your tax. Okay, it's 137.1. Copy to the right. Okay. All right, let me pause for a while and please, I hope you're able to follow. Pa-chat naman please kung sino nakakasunod. Okay, thank you, Jude. Yung iba, isa lang ba nakakasunod sa atin? About the rest, may iba pa ba nakasunod? Okay, thank you, Isabel. Okay, salamat, no? Okay, thank you. Chevron, thank you. All right, good. I'm happy that some of you are able to follow. Of course, I don't expect that all of you will be able to follow. Feel free to ask questions, and then definitely I'm going to post this in our Canvas. All right, so this is our net income after tax. Now, management, through the board of directors, of course, will make a decision whether the company will distribute dividends, right? Remember, one of the main function of finance is the dividend distribution decision making. So finance plays a major role there. Finance helps in determining if dividend should be issued, or if so, how much should it be? Okay. So dito, sinabi sa atin that the dividends will be issued 77.1. So let's just quickly understand that. So here, we have here the parang pie siya. We have here your net income after tax, 137.1. Okay, so this is your net income after tax. So management has decided that a portion of this, okay, this one will be distributed as dividends. So 77.1. Sorry for hindi proportional, ano? Pasensya na, hindi proportional yung share ng dividends. So what remains, guys, will be flowed back to operations. So this is distributed as dividends to shareholders. This one will be flowed back to operations, and it's called your addition to retained earnings. Okay, so our addition to retained earnings will be the difference between net income after tax and the common dividends. And copy this to the right. Okay, therefore, the addition to retained earnings is 60. Okay. All right. So let's go down. Okay, by the way, if we get the ratio of the dividends that will be distributed to the net income after tax. So this is the ratio for 2020. Okay, put it in percent. So this is what we call our DPO. What's DPO? That's your dividend payout ratio. Okay, so this one. It's called your dividend payout ratio. 56% in this case is the dividend payout ratio, right? And what remains is around 44%, right? So one. Okay, so let's just get also the ratio. This one divided by this one. So that's around 44%. Okay, rounded off, 44%. So the net income after tax, the distribution of which 56% went to DPO, dividend payout ratio, while our 44% was your retention rate. Okay, retention rate to retention rate, and this is your dividend payout ratio. Okay, so that covers our income statement. So let's go down. Okay, let's take a look at your balance sheets. You have your cash and cash equivalents, short-term investments, receivables, inventories, giving us total current assets of. Okay, how do you add this, guys? What's the function? Some of you would do this is equal to sum, right? I normally don't do that. If the numbers are together, okay, like this, I would use alt equal to. Okay, so that's the shortcut. So just to give you a hint, alt equal to. So this is what I did, alt equal to. Let alt equal to, and then automatically I get the sum function. And then what do you do usually? What will happen is that you would press enter, right? If I press enter, where did the active cell go? It went down. Automatically, it will go down. Okay. Do I want my cell to be here? No, I want my cell to still be here because I want to copy this formula to the right. So if that's what you want, okay, so this is the formula. Okay, do not press enter. Rather press control enter. So if I press control enter there, what do you notice? What happened? By pressing control enter, the active cell remained in that cell. So I'll just copy this to the right. Okay, so that's control plus enter. Okay, so that's what I at least here. Okay. All right. Therefore, we have again. I can use Alt equal to here, but it doesn't show the total current assets. So let me just drag it. Okay. All right. So we now have the for the balance sheet. We now have the assets. Okay. I won't stop because I'm not getting much responses from you because of the condition you're in now. But I hope you got this 2000 and 1680 for the total assets for 2021 and 2020. Okay. All right. Then let's go to the liabilities and equity. We have accounts payable, accruals. Okay, accruals are expenses that have been incurred but not yet paid. Okay, kunyari, accrued income, accrued, what else? Accrued salaries. Okay, and also notes payable. So these are your current liabilities. Once again, Alt equal to automatically, and then Control Enter, and then copy to the right. Right. So I'm showing you some quick tips in Excel to enhance your capability in navigating through Excel. So we now have our total current liabilities, and then we have our long-term debt in the form of long-term bonds. Therefore, Control Enter, Control Alt equal to. So hindi niya sinama to. Sama natin yan. Okay. So we now have your total debt. Okay. Now, is this a corporation or a single proprietorship? We know that it's a corporation because of the presence of common stock. Pag single proprietorship, walang common stock. Common stock are shareholdings of owners, of part owners in the business. Okay. And then you have retained earnings. All right. So you have the retained earnings for 2020. Now the question is, how much will be the retained earnings for 2021? So the retained earnings of a particular year is equal to the retained earnings of 2020 plus the addition to retained earnings of 2021. Okay, so for 2021, this will be added to retained earnings. Okay, so let's compute for the new retained earnings for 2020. So it will be equal to, we're getting the sum of your retained earnings of the previous year, 2020, and then what will be added is the addition to retained earnings for 2021. Okay, so I hope this is clear, class. Okay, Control Enter. All right, so this is now your retained earnings for 2021. Now, how did we get the retained earnings for 2020? Of course, we needed to have the retained earnings of 2019. Okay, and then we add the addition to retained earnings of 2020. That's how you got this. But since we do not have the 2019 figures, we cannot really show that. Okay, therefore our total common equity is just the sum of your common stock and your retained earnings. So Alt equal to, Control Enter. All right, and then we can now add the total liabilities and equity. So let's sum up your total liabilities, which is total debt, and then your total which is an total common equity. Right. So we add the total liabilities and equity to arrive at 2,000, and then this one 1,680. Okay, and then if we check, guys, do we balance? Yes. Total assets 2,000, total liabilities and equity 2,000. This one also 1,680, 1,680. All right. Okay, so let's answer this question. We're now going to, we're now in the process of constructing the statement of cash flows and the statement of retained earnings. Or sometimes the bigger one is a statement of changes in your shareholders' equity. Okay. So first, what financial statements are needed to construct the statement of cash flows for 2021? If you want to construct the statement of cash flows for 2021, you need these things. Number one, you need you need the income statement for 2021. Okay. And then you need the balance sheet for 2021, and then also the balance sheet for 2020. Questions. Will we be able to construct our statement of cash flows? Answer is yes. Bakit? Meron ba tayong income statement ng 2021? Yes. Up above, we have here our income statement for 2021. Second requirement, do we have the balance sheet for 2021? Yes. We have the balance sheet for 2021 and also the balance sheet for 2020. Okay, since the documents are complete, then we can prepare the statement of cash flows. Okay, so it's almost time, class. Okay, can I just, hindi na. This will require 5 minutes. Okay, so let's stop there, class. So next Tuesday, next Monday, we're going to meet online again, and we're going to continue this discussion. Okay, and hopefully we'll be able to discuss up to the last so that we go on to the next worksheet. Let me just delete this. Okay, so let me stop recording.